Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure to recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Wright's Good Night. Today is Tuesday, August 26th. I'm Huang Fengrui. Today, we'll be discussing a few topics. Right now, we can see that America's system is being rapidly weakened. This system is, for the most part, about the rule of law, the order of society, and the rules by which things operate. Next, we can see that, overall, this foundation has already started to be eroded. So when will the economy start to feel the impact? It might not happen that quickly, because right now, large tech companies still have a lot of resources. At the moment, Trump is actually going up against the United States as a country. This country is uniquely advantaged, and its economy is performing much better than most other countries, so this trend may continue for some time. During this process, the risks will gradually accumulate, so let's keep watching what happens next. Alright, so for this week's schedule in Japan, today the more important events will be the release of IQ or consumer confidence data. In addition, there will be data on durable goods and capital goods. In a moment, we'll take a look at the outlook for these numbers. That is, the data for the 27th, 28th, and 29th, which everyone can refer to. Today, we have the July durable goods data, and this is the month-on-month growth rate. Currently, if we look at the data excluding transportation, which is the standard measure, we can see that both the forecast and the previous value are around 0.2%. So overall, as long as the durable goods data meets expectations, it shouldn't have much impact on the market. As for capital goods, there are some differences between shipments and new orders. But it looks like new orders should improve a bit, while shipments may be slightly lower compared to the previous value. Looking at business or consumer confidence, we can see that we've collected this data over a relatively long period. You can see that at the end of 2024, the data spiked upward, but at the beginning of 2025, due to many of Trump's actions, including tariffs, the data started to decline again. It wasn't until the past few months that we've seen some rebound. But you can see that this rebound is still at a relatively low level compared to previous years. The current expectation, actually 96.5, is still in this relatively low range. In fact, high inflation or the rising cost of living has already started to affect consumers year by year. So this is actually something to keep an eye on going forward. Alright, so now let's look at the US dollar index. At the moment, the dollar index is actually showing a relatively weak trend. We'll talk about this in a bit, but the important thing today is that Lisa Cook, she might, or actually, she should have already been dismissed. Right now, she's fighting a legal battle. So currently, both the dollar and US Treasury bonds are under some pressure. For now, we'll have to watch how things develop, and we'll get into more details about this in a moment. Next, let's take a look at US Treasury yields. You can see that the 10-year yield has risen quite noticeably. In a moment, we'll look at the 30-year US Treasury yield, and for the 30-year, there are clear signs of a rebound. This rebound is quite obvious, and right now it also means that Trump's influence over the Fed is becoming more and more apparent. So at the moment, people are actually worried about the state of the economy, the Fed's independence, and whether there will be any negative impacts on the US as a whole going forward. This could potentially change risk appetite. So right now, as we go through this process, a lot of information will gradually accumulate, and eventually, there could be some significant and noticeable changes. Currently, the 2-year US Treasury yield is relatively low, which mainly reflects expectations for interest rate cuts. Alright, next let's take a look at the stock market data. First up is the S&P Wink with Tongue Sticking Out 500. The S&P Wink with Tongue Sticking Out 500 didn't really move much yesterday, and right now, the market is basically waiting for Nvidia's earnings report, which will be released after the close on Wednesday. The question is whether this could provide the momentum for another upward move in the stock market. As for the Dow Jones, it saw a fairly significant rise last Friday, but now it's pulled back. However, this pullback isn't very large either. So, it looks like the market will be fluctuating over the next few days, and everyone is waiting to see what happens after the close on Wednesday. The situation with the Nasdaq is pretty much the same, everyone is still waiting. The same goes for the FIBON, it's basically the same situation. First, you can actually see that both the Nasdaq and FIBON didn't change much yesterday, so they're basically just waiting as well. Right now, the market is pretty directionless. Alright, so let's move on and talk about the current market situation. So, what's actually happening in the market right now? You can see that right now, the US is increasing its intervention efforts, and this intervention is happening on all fronts. Whether it's companies, any kind of institution, foreign entities, or any organization, they all face more control and oversight. So how should we invest now? One approach is to invest alongside the government. Let's just look at this purely from an investment perspective, without considering any other value judgments. So if we're talking about investing, if the government takes a stake in a company like MP Materials, or if it wants to support the space industry, isn't that basically investing alongside them? As long as these industries receive government backing, they'll have relatively promising prospects. We also mentioned today that nuclear energy is one of those sectors as well. So that's one aspect. Another approach, given the current market conditions, is that over the next few weeks or so, you could invest in small and mid-cap stocks with relatively high certainty. This presents a short-term opportunity. If you have a higher risk appetite, you could also invest in smaller stocks that are more speculative. We'll take a look at that in a moment. Next, I want to talk about the main themes in the investment market. One is AI, and the other is large-cap tech stocks. After AI, we know that it's a very clear development theme, and it's also currently the most important driving force behind technological breakthroughs. As for large-cap tech stocks, we'll see in a moment that, first of all, they have abundant resources. Besides that, their market position is also favorable. They can make money whether the market is facing headwinds or tailwinds. This kind of investment is relatively stable, and you can expect it to gradually go up. The volatility is also relatively predictable. So, at the moment, these seem to be the current investment directions. If anyone has any thoughts, feel free to leave a comment and join the discussion. Alright, next, let's first look at investment news in the global arena. China's trade representative, Li Qinggang, is visiting the US, which shows that communication between China and the US is ongoing. Li Qinggang's trip to the US is not an official visit, and he won't be meeting with his American counterpart of the same rank. Instead, he will be meeting with US Trade Representative Catherine Tai. But Li Qinggang's visit to the US still shows that China and the US are continuing their discussions and talks. As we know, China and the US are currently in the second 90-day grace period for tariff negotiations. This year, everyone is looking forward to a possible meeting between Trump and Xi Jinping. Today, Trump mentioned that there is a chance he might have plans to meet with Xi Jinping. All these things, actually, are more favorable to the mainland and Hong Kong stock markets compared to the US stock market, because we can see that right now, China's fundamentals aren't that strong, so this gives them a bit of breathing room. Now, if China can reach some kind of agreement with the US, it will depend on the details of how that agreement is drafted. But relatively speaking, if a better arrangement can be reached, it would have a stimulating effect on the future market development or uncertainty itself. Next, there's a possibility that Trump and Xi Jinping will meet, and this meeting actually signifies that there is room for improvement in the relationship between the two countries. Because if you look at the Russia-Ukraine war, the leaders of Russia and Ukraine won't meet face to face, which means that the relationship between the two countries still needs improvement and is something to keep an eye on. But in the case of the US and China, if they really can meet, it means that China will gain some breathing room in this round of intense pressure from the US, and that breathing room would be beneficial for the performance of mainland and Hong Kong stocks. Next up is South Korea. After President Lee Jae-myung visited Trump and then went to the White House, South Korea significantly increased its investments in the US. So when it comes to aircraft manufacturing, we'll mention that South Korea has signed some agreements with Boeing and GE. Hyundai Motor of Korea is also planning to invest, or rather, will invest over the next 4 years, with the amount reaching $26 billion, up from the previous $21 billion. They'll also be buying some natural gas. In addition, both sides have signed 11 agreements covering shipbuilding, nuclear energy, aerospace, and critical minerals. However, these agreements are currently non-binding. But as we can see, even though South Korea has done all these things and Lee Jae-myung went to the White House to show goodwill to Trump, South Korea's official tariffs have not been lowered yet. So, it shows that the US is still taking a relatively tough stance here. So, from this, we can see, if that's the case for South Korea, what does that mean for Taiwan going forward? Next, the US has notified India that it will start imposing a 50% tariff beginning on the 27th. Remember, the original tariff rate for India was 25%, but because India wants to keep buying oil from Russia, this tariff has been raised to 50%. After the increase to 50%, actually, starting from noon today, the US will begin charging India this much higher tariff just 1 day later. As of now, India still wants to keep buying oil from Russia, and its attitude and stance on this remain unchanged. So we'll have to see whether this 50% tariff will actually be implemented. Usually, even up until the last few hours, there might still be some room for maneuver or an emergency halt. Alright, next, Commerce Secretary Luther mentioned that later this week, a trade agreement with Japan will be announced, and this agreement involves $55 billion US. He also mentioned that the US wants to manufacture rare earths, antibiotics, and chips domestically. So, to sum up, there are basically three main investment directions. The first is that the US government is moving toward a kind of state capitalism, so you just follow along with what they're doing. The second is short-term opportunities in small and mid-cap stocks. And then, there are large tech stocks or themes related to AI. So you can see that right now, if the US really does gradually shift toward this kind of state capitalism, or what you could call a national tech conglomerate, then the direction we should take is actually going to be relatively clear as well. It's like the government telling you what it wants to invest in, so you follow and invest in those areas. Or if the government says it wants to develop an industry, you look at companies that are key players in that industry, leaders, and those that get subsidies or partnerships, then you invest in those companies. So actually, right now, this is an interesting investment direction in this kind of environment. Next up is Apple. They mentioned, according to Indian media reports, that they've told the Indian government their investment will continue, and that Apple's commitment to India remains unchanged. So, what exactly are they committing to? They're committing to invest $2.5 billion in India, and they expect the annual production of iPhones in India to increase from the current 40 million units to 60 million units. This basically means that Apple is hedging its bets between India and the US. After Trump wanted Apple to return to the US market, Apple gave Trump some face by saying it would invest over $500 billion in the US. But as for India, Apple is still going to keep building there. Right now, Apple has production bases in both India and China. The Indian facilities mainly supply the US, while the Chinese ones mainly supply markets surrounding the US. So at the moment, you can actually see that companies are using a lot of flexible strategies to deal with uncertainty, especially the big tech companies. Overall, if you're investing in large tech companies, up to now they've still been handling things pretty smoothly. Next up is Trump. There's actually a lot of news about him today. So he suddenly comes out and says, I'm threatening to impose high tariffs and restrict the export of technology and semiconductors. Why am I doing this? It's because I want to retaliate against foreign countries for their digital service taxes targeting American tech companies. This issue is being brought up again, and you can actually see that his approach is always the same few moves. One is tariffs, he's talked about them and already implemented them. So honestly, people aren't even surprised anymore. The other move is restricting exports, which is something people have mentioned many times already. So right now, it really just looks like these same few tactics, used over and over again to apply pressure. This is mainly targeted at the EU and the UK, but mostly at the EU, since the relationship between the UK and the US is relatively good. After this statement was released, the EU responded within a few hours, saying that regulating these digital activities within EU territory is a matter of EU sovereignty and cannot be infringed upon. Actually, we can see that the US and the EU still have things to discuss, so for now, the talks will continue. So at the moment, these issues won't become a background event, but they also won't have a significant impact on the market. Now, the impact returns to the fundamentals of the US system and, next, to corporate performance. This is the situation regarding the impact on the US stock market. Alright, now let's move on to updates from the US government. Trump is about to make a move, and there's also Fed Governor Cook. This is because the president does have the authority to dismiss a Fed governor, so at this point, Cook should have already been removed from office. Since he stated that he would not resign, he has sought legal counsel and is preparing to file appeals and objections. So now, the situation has entered a legal battle, and we'll have to see how this legal fight unfolds going forward. This move is actually the first time in the 111-year history of the Fed that something like this has happened. No one expected that the president would actually, in the past, there may have been conflicts between the Fed chair or governors and the president, but there has never been a president who actually fired a Fed governor. So right now, this is really happening, and we'll just have to see how things develop from here. According to the regulations, there are 3 conditions under which the president can remove a Fed governor. The first is inefficiency, the second is neglect of duty, and the third is involvement in illegal activities in the past. As for involvement in illegal activities, there's still room for discussion about whether it's related to official duties or personal matters. For example, right now it looks like Cook was caught for illegal activities in his private affairs, so we'll have to wait for the judge's ruling on this. So, this is something that still needs to be watched. Right now, the damage has already been done, so we'll have to see how things develop from here. So why is he being so aggressive about trying to get rid of Cook right now? One reason might be that he really dislikes Cook, and the second is that if Trump manages to get rid of Cook, he could control 4 out of the 7 seats on the FOMC. That would mean, regardless of who the Fed chair is, he could basically direct the Fed to do whatever he wants. Assuming those 4 seats all listen to him, so that's the current situation right now. This basically shows that the government's overreach is actually very clear right now, and they're not even trying to hide it, they're openly saying they want to control the Fed. So that's the current situation. As for Cook, whether she has a chance to keep her position as a Fed governor until 2038, honestly, it's probably not that optimistic. We'll just have to wait and see what happens. So right now, in terms of here, the forecast actually shows that there's only about a 20-something% chance that Cook will still be a Fed governor by the end of September, and about a 30% chance she'll still be in the position by the end of this year. So, it's a relatively low probability. This has also led to higher long-term bond yields, which means long-term bond prices have dropped, and the US dollar has weakened as a result. However, at the moment, because of a unique global status of the US dollar and US Treasury bonds, betting against or shorting the dollar and US Treasuries might not necessarily be profitable. That's because, right now, the overall narrative or the US economy as a whole hasn't reached a clear low point yet. Alright, moving on, let's continue talking about recent developments in the US government. Actually, if we look at it, when Trump invested in Intel, he made it very clear that after Intel, he planned to make many more similar investments. White House economic advisor Hassett also mentioned this. That this kind of approach will appear in industries beyond semiconductors. At the very least, this kind of spending will expand. For startups, this might not necessarily be a good thing, but it means that more and more companies will emerge. Essentially, this is what's happening. We might recognize this as a familiar form of state capitalism, but Americans themselves might not see it that way, since the US market is supposed to be free and open. So from their perspective, from long ago until now, there has always been private ownership, with a strong emphasis on this kind of society, on entrepreneurial spirit, and on individual value. But this sort of thing could also be interpreted as socialism, and it's actually very easy to hype up. For example, if the Democrats were to say, "Oh, this is socialism, so we want to promote socialism," then there's a chance the country could shift in that direction. So right now, when we look at this whole throwing iron salt thing, actually, if they want to do that, if the government tries to get its hands into more companies, there will actually be even more challenges. We'll see more reports about this later. On another note, Trump hinted that he might change the Department of Defense to the Department of War. This kind of thing it's unclear what exactly he means by that. Maybe he mentioned that he wants to revive the warrior spirit, and that the US shouldn't just play defense, but also go on the offensive. This kind of offensive stance is pretty aggressive, and honestly, it's quite an assertive and even aggressive statement. You can take that into consideration. So right now, as mentioned again, like we mentioned, the American system is being rapidly weakened, but as for this, honestly, at the moment, it probably won't have much of an impact. You can see that the market's reaction to book being dismissed hasn't been all that significant. It's actually pretty mild right now. There have only been minor fluctuations. So actually, everyone is still watching to see how things will really develop going forward. For businesses, if this kind of thing continues, it means the American economy, or rather, its institutional foundation, could suffer irreversible damage. Next, Trump has started attacking states governed by the Democratic Party. The more important economic hubs are Illinois, which includes Chicago, and Maryland, which covers Washington, D.C., and also California, which is the largest state in the U.S. economic corridor. The governors of these states are Democrats, and Trump has said to them, or rather, to the entire nation, that if you don't do a good job fighting crime in your states, then I might, well, Trump could deploy, or the federal government could intervene through other federal channels to take over public safety in those states. This topic actually represents his intention to boost, or possibly connect to, increasing support for the Republican Party. And on the other hand, actually, one is government intervention in businesses, and the other is the government interfering in various states, and correspondingly sending in paramilitary forces to intervene in domestic affairs, or to handle internal matters. So, the direction this is heading in. What is it? Are we just going to end up becoming something like a dangerous or failed state? Actually, right now, there is slowly a trend in that direction. So, let's keep watching how this develops, because actually, even though the news is constantly evolving and we'll have to see how things play out in the long run, we'll keep following up. Next, ASUS mentioned that Trump is the chairman of the American system, and previously, when tariffs were introduced, it left many countries confused. not knowing what the actual data was. So how can tariffs be reduced? This kind of thing is actually hard for everyone to say, and if Trump is unhappy, he can just drastically raise your tax rate. This has caused significant difficulties for various countries and foreign companies, meaning that many countries, or rather, have been required to invest in the United States. And now, actually, the government is also making things more chaotic among various companies, including domestic American companies. This chaos, actually, we can refer to an article for this, but on Access, it mentions that currently, if you are a private company, you can see this on the screen, meaning if it's Trump, your company might be taken over very quickly. His administration's influence will reach into every company, so you can say that the current topic is. These kinds of things are already happening one after another. For example, right now, chip companies have to pay a percentage of their revenue. If your revenue is from the book, then Apple has to be invested in with $100 billion. And then there's the golden share in US Steel, and services like law firms, and so on. This is also having a corresponding impact on the entertainment industry. So right now, overall, what we're seeing is basically chaos. People just don't know what to do. In business, or as we discussed yesterday, it's really important to have the rule of law. And the rule of law basically means having clear rules. But now, the rules are becoming more and more unclear. Plus, with the government taking stakes in companies, not only are the rules getting murkier, but efficiency is also taking a hit. The way companies think won't be purely business-oriented or based on a capital market mindset anymore. Other considerations will get mixed in. And this is all pretty relative. If you want to become, or maintain your status as, a major world power, you can't operate like this. But well, that's just how things look right now. Okay, next, let's talk about the US market. Trump has mentioned that the US actually has more tools at its disposal in trade than China does. Airplanes and aircraft carriers are powerful weapons to counter rare earths. So here's a key point. When it comes to investing, the focus should be on airplanes and their components. In this context, he mentioned that China is restricting rare earth exports. So if the US doesn't supply Boeing components to China, that means many of China's Boeing planes can't take off because they don't have replacement parts. That's the situation we're seeing right now. As for Boeing, or companies like MP Materials that we've mentioned before, these are firms that are more closely tied to US interests. Right now, they're the main ones being supported by the US government. You can actually see that Boeing is one of them. These companies represent countries buying American products. If you want to negotiate treaties with the US, or invest in something American, you'll end up buying Boeing planes. That's it. These are the companies with a relatively clear investment direction. Let's go back and look at this. Let me add something else. When Lee Jianming met with Trump, Korean Air also announced that it would purchase 100 Boeing planes. Next is Rocket Lab, which is the space industry company we picked. They announced they would receive $24 million in subsidies from the CHIPS Act, and this subsidy will be invested in manufacturing chips for solar cells. Looking at management sensors, this shows that the US wants to develop the space industry, and the leading companies or top players in this field are companies like Rocket Lab. Let's take a quick look at some of their stock price movements. For example, this is Boeing. Its performance has actually been relatively stable. As for the price rebound, it's currently in a volatile state. Next up is MP Materials, which has suddenly surged. Now, after hitting the second moving average, there's been some resistance, so it's something everyone should keep an eye on going forward. You can watch for when it might be relatively suitable to make a move. Next up is Rocket. You can see that right now, even though it pulled back after hitting a new high recently, it's actually showing a pretty clear rebound at the moment. For these kinds of red candles, everyone should pay attention and keep an eye on them. There aren't any specific supporting industries or particular areas of focus for Hoei Kensuk. So, everyone should look for similar companies. The government will also directly tell you which companies to watch. So, what kind of companies are these? Just look at some companies' fundamentals and technicals, that's it. Alright, next let's continue talking about the dynamics of the US market. In the research report section, a Bloomberg report pointed out that billions of dollars in AI spending is just a drop in the bucket for tech companies. Actually, when tech stocks experienced a rather noticeable and sudden drop last week, everyone started to question whether the capital market can keep going, and whether this is a bubble. Then, the report mentioned that these companies actually have a lot of cash, and they have many channels for financing. Plus, these financing options might come with very low and very cheap interest rates. Over the next 2 years, this situation should continue, and there's still room for growth. This means that, at present, these companies not only have money, but reportedly, whatever they're doing now, they'll have money to keep investing in the future, and they can even increase their investments. So even if the level of debt might rise a bit because they're borrowing a lot, their revenue will still grow, profit margins will remain stable, and their free cash flow, that is, their liquidity, will stay relatively high. So at the moment, actually, what's really sweet is that this forms a defensive characteristic for tech companies. In other words, large tech stocks have both growth and defensive qualities. So right now, this is actually the second clear investment theme. Also, Goldman Sachs has said that AI stocks are currently experiencing a tactical pullback, not a strategic shift. It's just a short-term correction, and there's no sign of a major adjustment coming. So why are AI stocks experiencing this tactical, short-term pullback? Mainly, it's because of high valuations, and people have started to question the returns or are shifting funds to cyclical stocks. Since we're currently in the cycle before interest rate cuts, the second investment direction right now is to invest in large tech stocks. This is a relatively stable and defensive investment. So, as you can see, right now it's the tech giants. This includes both American and Chinese companies, and the cash reserves they all hold, with the unit being billions of dollars. As you can see, most people believe that the majority of these tech companies, the 7 giants of the US stock market, all have large cash reserves. This is the amount they have borrowed. People ask, why borrow so much? Interest rates are low, so not borrowing is a missed opportunity. Also, borrowing helps create financial leverage, allowing expansion or capital structure optimization. That's the current situation. Big companies are relatively comfortable on the financial side, but when it comes to capital expenditures, this chart only shows free cash flow. If we look at capital expenditures, Amazon ranks first, Microsoft is second, and Meta is third. In fact, compared to these companies, K is relatively. As for Amazon, it's actually not as strong in this regard. You can see that its free cash flow is relatively low here. Both Meta and Microsoft are ahead of it. Next, Amazon is the one that borrows the most money, but Amazon's own cash level is also relatively low. You can see that the other companies are actually doing okay. So overall, when it comes to leading tech companies, there's really not much to worry about. Going forward, they should still be considered a dominant force in the market. A dominant force in the market. Alright, next let's talk about yesterday's Apple. Yesterday, they announced the launch of physical AI, as well as a design kit and production module specifically for physical AI and baseline design, called JSON. So, this thing is actually, it's 7.5 times more powerful than its previous generation, and its energy efficiency is 3.5 times higher. What this means is that it enables robots to interact intelligently with humans, and the physical world is a foundation. So right now, you can see that regardless of whether it's in the sales of group hardware, software development, or the advancement limits of cutting-edge technologies like autonomous vehicles, it holds an indispensable position. And since the market is still very strong right now, AMD isn't really a competitor. So, for the time being, Nvidia's dominance of the market is likely to continue for a while. We'll just have to see how things go, and how their financial reports turn out. When the time comes, we'll discuss it with everyone again. So, regarding the changes in the stock price that this answer refers to, we'll just have to watch how things develop on Wednesday and Thursday. Next, let's move on to the next investment theme, which is about small-cap stocks. Recently, Bank of America and UBS released reports mentioning that small-cap stocks, or what they call low-quality stocks in English, which we translate as high investment risk stocks, actually have short-term opportunities. You can see this from the changes between the S&P with tongue sticking out 500 and the Russell 2000 at the moment. It's unclear whether the trend of the Russell 2000 will follow that of the S&P with tongue sticking out 500, but the expectation is that there's a chance these small-cap stocks might catch up. However, this is really a short-term play and you have to be very selective, so everyone can use this as a reference for their investment direction. Alright, next up. Yufei mentioned that for this quarter, the second quarter, now that earnings season is almost over, among the S&P with tongue sticking out 500 companies, about 44% of them have raised their revenue forecasts. That's the highest since 2021. The percentage of companies lowering their forecast is 14%, which is the lowest since 2015. In addition, there were stock buybacks in July, and these buybacks are at their highest level in 3 years. So we can see why earlier, tonight and in previous segments, we talked a lot about this. Trump, Bezos, encouraging business leaders to influence costs, or to have more political intervention in society, and then all the guns are pointed toward hunting. So why is the stock market, or the overall market, still in relatively good shape up to now? It's because overall, company performance is what's supporting the market. In fact, when it comes to companies, in their most recent earnings reports, there haven't been many signs of weakness. Also, because of the postponement of tariffs or some adjustments, they've made some changes. The financials have forecasts and outlooks, and for now, this part is relatively stable. So, when it comes to economic data, there aren't any clear signs of weakness in the numbers. There's the expectation that rates could be cut, so people are in the game. Neither companies, the economy, nor interest rates have become the main driving force behind market capitalization. Although right now, the US, or rather the US market, is still in a choppy bull market, just like we talked about yesterday, it will keep moving forward amid the volatility. Goldman Sachs also mentioned that, based on their internal observations of S&P wink with tongue sticking out 500 companies, their barometer shows that the quarterly economic activity. In the second quarter, the year-over-year growth rate for these companies was 4.8%, which surpasses the economic growth rate. This means that, at present, the outlook or performance of these companies is still relatively strong. In fact, this is also a reason why the US stock market is not likely to go down easily. However, as for whether the market can rise significantly, the chances are relatively low. So, the conclusion right now is that while company fundamentals are strong, valuations or the overall P levels are also relatively high. Therefore, at present, although a major drop is unlikely, a long-term steep decline is also unlikely, but we also shouldn't expect a big rally going forward. For now, the market is just gradually trending upward with some fluctuations. Alright, before we look at the market strengths and weaknesses before the opening, let's take a look at an article. I feel like this article does a pretty good job of describing the current situation in the US. It's basically what we just talked about. How will things develop over time? Actually, all of this is still just beginning. After all, Trump only took office this January, and now it's August, so it's only been about half a year. There will definitely be more changes to come. During this process, whether it's the economy or the stock market, or investing in general, there's still a period of projection at this point in time, but at some point, real changes will happen. This was actually discussed by a previous German Nobel Prize-winning economist. He mentioned that when he wrote this article in February, it seemed relatively, well, quite unique. That is to say, he emphasized that sudden changes might come very abruptly. In his review, he imagined that if he were looking back at American history from the year 2055, he speculated about what might happen. He said that maybe in the early 2030s, this economy would stop growing and fall behind Europe. So, in other words, right now, this looks just like what we're seeing, meaning, current economic policies are starting to fluctuate, which is beginning to have negative effects on the economy. Inflation is starting to rise, and debt levels are soaring. So this part, I think, is actually quite visionary. He mentions the government tech complex, which is exactly what the government is trying to do right now, isn't it? It's basically a government technology conglomerate, with the state reaching its hand into the capital markets. Then the boundaries of the market start to blur, and it creates another kind of economic model. In reality, this sort of thing will eventually have some consequences, and that's what this part of his article is about. He mentions that America's support comes from its frameworks and its rules. But these things, in fact, will gradually be abandoned and discarded under the impact of such events in the future. So as these things change, we can actually look at how things will develop in the future. This is what this section is about. It shows that this system is actually the foundation of America's success. The next topic is about his participation in many things, which everyone can refer to. As for this article, it is actually this one. Anyway, regarding the US, I also think everyone can take a look. Here is the original English text. The real threat to American possibility. This is the article. Alright, next, let's take a look at the pre-market individual stocks. Currently in the pre-market. Where is it listed? AMD is showing a relatively obvious increase. IBM as well. Right now, it's a slight uptick, but if it drops, it could fall further. There's also Palantir. These past few days, the market has been volatile. We can check the trading volume. Basically, it's a situation with both gains and losses. Now, let's look at the overall market. You can see that right now, trading volume is quite high, and it's mainly small cap stocks leading the way. If you look at the top few, you'll notice their stock prices are relatively low, and actually, there are a lot of these kinds of stocks. These are individual stocks with relatively low prices. So, at the moment, you can see that overall, the market is still quite active in terms of trading. But whether individual stocks will really go up or down depends on each stock. Actually, in the past few days, the market direction hasn't been very clear, so it's still a matter of watching closely. How will events play out next? That's one aspect, involving government, economy, and non-economic factors. Another key point is corporate earnings reports. We'll be watching Western's earnings report after the close. Alright, that's all. Good night, and thank you for watching.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.